The stock market just had its worst losing streak since December. Tesla's down 25%. People on Twitter are calling for a major crash in the stock market, and retail investors are freaking out. But if you take away all the fear and we just get down to the facts, it's not that bad. Let's talk about everything that you need to know before the markets open on Monday. Last week capped off the fourth day in a row that the Nasdaq fell, notching its longest weekly losing streak since December. The S&P 500 finished the week deep in bearish territory, and the Nasdaq did the same. But one thing you're going to notice on these technical charts on both the Nasdaq and the S&P is this green candle on Friday. Friday's green candle was a technical bounce on some key support levels on both the S&P 500, the Nasdaq, as well as the Dow, and even the Russell 2000. They all bounced off of key support levels on Friday. And Friday's bounce is indicative of the market having a little bit of a relief rally this week. So the technicals, at least, are pointing to the market going up this week and ending that 3-week death climb that we've had. So after 3 weeks of extreme selling in the market, with some stocks down 25% in 3 weeks, the market looks like it's finally ready to rebound this week. But don't get too excited if the market does in fact rally this week, because the technicals are also indicating that whatever rally we get this week, it won't last. And either next week or the week after will probably continue a little bit of a downturn. The weekly chart on the Nasdaq just turned negative for the first time since last year. So the weekly technicals are indicating that we have more downturn to go, even though the daily technicals are indicating a bounce and a little bit of a relief rally this week. So it looks like in the very short term, over the next couple of days, we get some upward movement in the stock market. Then starting next week or the week after, we return back to some downward move in the stock market. Now, there's a lot of things that could cause that to happen and could cause this to be a lot more than just a technical movement in the charts. So let's talk about some of the things that are happening this week that could cause the markets to move. But first, let's talk about the market psychology. Because ultimately, at least in the short term, the markets are going to trade based upon market momentum, market psychology, and just general market sentiment. That is, how do people feel about the market? See, generally when people are fearful, they tend to sell stocks and the market goes down. And when people are feeling good and kind of greedy, they tend to buy stocks in hopes of them continuing to go higher. So where do we stand right now? Well, after months in greed and extreme greed, we are down to neutral. That's right. Even after the major selling over the past 3 weeks, we've only dropped down to neutral. Now, part of that is because we were in extreme greed 3 weeks ago before this market sell-off started. But part of it is also the mentality and the market psychology between stock traders and options traders. See, if we look at market momentum, which is the S&P 500 compared to the 125-day moving average, it's still quite bullish. So stock traders are still greedy. They're still bullish. And if we look at stock price strength, which is another indicator based upon the New York Stock Exchange, it's also bullish in the greed stage. So if stock market investors are still bullish and greedy, why is the fear and greed index at neutral? Well, it all has to do with those pesky options traders, because the options traders are in extreme fear right now, with more options traders buying puts than calls. And it is very rare for more options traders to buy puts than calls. Most of the time, the vast majority of the time, there are more people buying calls than puts. Why? Because the market generally goes up, and you would expect the market to go up, so you would buy call options. The fact that there are more people buying put options than call options right now is really scary. It means that options traders are extremely fearful about a major downturn in the market. But their fears might be a little bit overblown in the short term because, at least for now, stock traders are still bullish and they still want this market to go up, which means we should have some dip buying occurring, which is another thing that could push the stock market up this week. Now, all of that said, ultimately, the stock market is forward-looking. Depending upon who you talk to, the stock market is forward-looking anywhere from 6 months to a year. Let's just call it 9 months as the average that the stock market is forward-looking. And what are economists predicting to happen in the next 9 months? Well, if you said a recession, you'd be correct. Economists are predicting a recession to start in the beginning of 2024, if not by the end of this year. And with the stock market being forward-looking, it's now looking forward to a recession, which means stocks are starting to sell off. So even if we get a relief rally this week, even if we get dip buying this week, even if the technicals hold up and push us up this week, longer term, the market remains bearish as investors start to become fearful about an upcoming recession. Now, ultimately, in the short term, the stock market is going to trade based upon news and other events that come out. This could be economic data, Fed speakers, any number of news events that could move the markets. Now, while a stock market is going down, the general rule of thumb is no news is good news. If we're not getting any more bad news, the stock market can take a little bit of sigh of relief and have a little bit of a rally. And if we look at this week's major U.S. economic reports and Fed speakers, the calendar is quite light. So especially on Monday and Tuesday and even Wednesday, we basically have no news, which means Monday through Wednesday, at the very least, the stock market can and probably will go up. But then Thursday and Friday is where it gets a little bit iffy. Now, there is some major news happening Wednesday night, what I'm going to talk about in a minute, but let's talk about the news happening on Thursday and Friday first. On here, you're going to see Thursday at 10 a.m. and again at Friday at 10 a.m. There are Fed officials speaking from Jackson Hole, with the big one being Powell speaking on Friday at Jackson Hole. Now, if you're not familiar with what Jackson Hole is, this is essentially a Fed meeting. But it's not just like the monthly FOMC meetings. This is like a mega meeting, like a big meeting. It far outweighs all of the monthly FOMC meetings. And this is where economists from both the US and other countries around the world get together and help decide future Fed policy. And this has major implications for the future of the US economy. Because of that, the interviews coming out of Jackson Hole on Thursday, and especially Jerome Powell's speech on Friday, are normally major market movers. So we can expect some major market moving on Friday. So much so that even if we get a big rally Monday through Thursday, Jerome Powell could come in, screw it all up, and send the stock market crashing on Friday. Just as easily, though, he might say something that investors like and send the stock market rallying on Friday. We don't know, but one thing's for sure, we can expect a pretty major market move on Friday. Now, if you wanted to do something with some option strategy, maybe like a straddle or a strangle, something that makes money whether the market goes up or down, we just need a big enough move, then certainly you would have that opportunity. The key there is to open up both a call and a put on Friday morning, sometime between 9:30 a.m. and 10 a.m. In the first 30 minutes of trading, you can open up both a call and a put. And that would make money no matter which way the market moves, just so long as Jerome Powell's able to move the market enough for those options to be in the money. Normally he is, usually he is. So it's a good bet, but it's no bet is without risk. Obviously, the market might not move. You might lose your entire investment. This is by no means financial advice. I'm not telling you to go out and place this trade. I'm just letting you know what I'll probably do. because usually this sort of trade works out to do a straddle or strangle on the day of Jerome Powell's Jackson Hole speech. So Friday morning, sometime between 9:30 and 10 a.m., within the first 30 minutes of marketing open, buying a call, buying a put, and hopefully the market moves enough for that trade to make money. Now, I did tell you that there would be another major market mover Wednesday night. So let's talk about that one now. Now, even though earnings season officially ended last week, there are still some companies reporting. For example, we've got Zoom Monday after the close, Baidu Tuesday before the open, Toll Brothers Tuesday after the close, and Peloton Wednesday before the open. But Wednesday after the close is the big one, the big kahuna. No, I'm not talking about Snowflake. I'm talking about Nvidia. Nvidia is the last major tech company to report earnings, and this is expected to be a major market mover. Nvidia has run up significantly over the past few months, as investors expect significant, huge, major growth. Nvidia themselves said that they expected revenues to double with the new AI chip and all the hype around AI. If there is one clear winner from AI, it is Nvidia. And that is why the stock has been rallying. But some people think the stock has gone up too much. After all, with the PE ratio well above 60, the stock is not pricing in earnings doubling. The stock is pricing in earnings going up 6x. So certainly investors have bought the stock up. Have they bought it up too much, though? That's the question. That's what we're going to find out on Wednesday. Now, if Nvidia has the same sort of reaction that most of these tech stocks have had, whether it rises or falls, there is a good chance that it falls after earnings. Now, it might not fall the day after earnings, but it might fall in a few weeks after earnings, like most of these tech stocks have. Now, it might have the reaction like Tesla did, where it beats earnings, but it's just so overvalued that people sell it anyway. Or it could have the reaction like a few other tech stocks had and rise because Nvidia comes out and increases their forward guidance or something to really make investors even more excited than they already were. So this is what we're going to have to watch out for Wednesday after the close, are these Nvidia earnings. Now, all of that said, there's not enough time to go over everything that you need to know in one short YouTube video. So I do encourage you to go sign up for my free weekly newsletter. This free weekly newsletter gives you all of the information that you need to get prepared for the week ahead. That newsletter goes out every single Sunday night. So if you want all of the news that you need to know to get prepared for the market open, make sure you sign up for my free weekly newsletter that goes out every Sunday night. You can sign up at our new website, weprofit.io/newsletter. That's weprofit.io/newsletter. If you got a lot out of this video, then be a good friend and share this video with your friends and family and on your social media pages so that others will know what's going on in the market as well. Don't forget to hit the like button and subscribe. And if you missed the last video I uploaded where I went over the stocks that I bought on Friday, make sure you watch the last video I uploaded here.